Okay, so welcome to what is today's blackout. Welcome to what is our Confronting COVID-19 webinar, and of course we're doing it with Blackout Day. So effectively, we do these events once a month, and it's really all about how can we as a community, not only as a community, but how can entrepreneurs in general confront the virus. And when BYP reached out to us and said, look, we're planning to do a whole bunch of webinars for what is Blackout Day, we was like, look, it makes so much sense. In fact, actually, what we'd love to talk about is how, those from BME communities, those from Black and ethnic minority communities can go about accessing finance. So we thought, why not come together alongside with all of the other kind of businesses that got involved. That includes everyone from the UK Black Business Show that was much earlier today. Also the likes of those like Guap Magazine that will be after us, BYP themselves, Boyoti, and so many others. Why don't we all just come together and do something that's a bit more kind of impactful and a bit more positive for the community. So today we're going to be really talking about, like I mentioned earlier, access to finance. And for those who don't know, my name's Demi. I'm the founder of a company called Lendoe. And Lendoe's mission and our agenda really is basically to provide finance for those from underrepresented communities. We're all about providing finance for underestimated entrepreneurs, and we consider underestimated to be those that are from Black, ethnic minority communities, or that are early stage, so within their first, you could say, 1 to 2 years of doing business. And to date, we've done just south of £1 million in lending, and we're now looking at how we can actually kind of expand that by working with partners and doing a lot more matchmaking alongside using technology to make the experience wonderful for today's underestimated entrepreneur. So going to try and do a bit of both things here, which is one, administering and letting people in the waiting room, letting them into the chat, but at the same time kind of moderating this panel. We've got some great panelists for you today. We've got a good friend of mine called Tom, alongside Ezzy and Lauren, alongside Shams as well. She's not. I don't think Shams is on the call just yet, but hopefully I'll be able to find her in the 120 odd people that are on this discussion. But what I'll do now is I will let the panelists introduce themselves. In fact, before I do that, I'll just do one shout out, and that's to Hatch. So Hatch is a charity that effectively tries to build diverse communities, diverse communities through entrepreneurship. They sponsor all of our events, so I'd like to say a special shout out to Hatch. Thank you for sponsoring the event, giving us some money to put ads behind the event so everyone can find out about it. And thank you for just doing the great work you do. But now, now I want to bring in the panelists. These are all people who I respect very highly. I actually selected people who have, to some degree, in some way, shape or form, advised me or influenced me or kind of have worked with in the past. So I know they all have the kind of credentials and the credibility to kind of advise everyone on this call. But also, they're just great people in general, and they're here for the community. So I'll start with Ezzy. I'll let Ezzy introduce himself. Then I'll go to Tom. Then I'll go to Lauren. And then I will try to find Shams and let her introduce herself. Okay, cool.
Hey, can everyone hear me? Demi, can you hear me?
Yep, I can hear you, yep.
Perfect. So just a quick 20-second intro about myself, or anything a bit longer than that? What do you want from me?
No, 20 seconds is fine.
Quick 20-second intro. Fantastic. So I'm Ezechi Britton. I'm one of the founding members, principal and CTO in residence for Impactxcapital, which is a venture capital fund supporting underrepresented entrepreneurs in the UK and Europe. My background is in financial services technology, so I spent over 10 years in the investment banking technology space at both Lehman Brothers and then Credit Suisse. And then I co-founded Neighbor, where I was the founding CTO. And that was a multi-award winning lending company that we grew from scratch to an addressable market base of over 1 million people, over 300 organizations that we worked with. And we lent out somewhere in the region of 170 million over the 5 years that I was with the company. Now, alongside Impactx, I'm also the co-founder and director of an organization called Codeuntapped, which is a digital skills accelerator, which helps give underrepresented technologists their voice by connecting them with organizations that are looking for access to diverse talent as well as innovative solutions to technical problems. So that's me. Thank you.
Great. Thank you so much, Ezzy. So as you can hear, I mean, Ezzy's got years of it. He's got kind of decades of experience.
Not quite decades, maybe 15 years.
Not yet. Not yet. Not yet. But I mean,
not great, not that much.
But collectively, I mean, when you look at his team at ImpactX, they have decades of experience in investing in Black and diverse founders. You know, when you look at some of the businesses he started, such as Neighbor, some of the things like Credit Suisse, you know, he has the capacity to provide you advice. So when he's talking, please listen, please. Cool. So I'm going to now unmute Tom and allow Tom to introduce himself.
Well, I think I do go into decades. So I started in the startup world in 1999. So I ended up working for 5 startups before eventually starting my own, which was Metail, which I founded and ran for 11 years before selling it in the summer of last year. So during the course of that time, I raised over £25 million. Built up a team at the end of about 40 people between London and Cambridge, high tech focused fashion startup. Ended up selling that to a Hong Kong based global clothing manufacturer. And since then, I fully exited in the summer. I've been focused on positive society and climate related projects. So I sit on the board of 3 climate related businesses. And I'm on the board of trustees for MeWe 360, which is a Black-led and Black-focused incubator for people in the creative industries. And I recently co-founded Extend Ventures, which is looking to diversify access to finance. Again, Black-led and Black-focused. We are in the process of kicking off a big research project over the next year to basically understand all businesses over the last 10 years, overlay ethnicity over the top using computer vision and machine learning to really, truly, finally understand performance of Black and ethnic minority businesses and essentially change the whole narrative. So to move away from the anecdotal and into evidence-based approach to finally convincing the people with finance, the people with the money and the government to finally provide what's due. So that's me.
Amazing. Thanks so much for that introduction, Tom. And I mean, you heard it, right? You know, over the space of, I don't know how many years it was he was running Metail, but 25 million he raised. You know, just listen. Like when these people are talking, please listen. So now I'm going to introduce Lauren. Lauren Mathurin is, in fact, sorry, let me do it. I do it myself. I'm sure she'll do it much better than me.
Thank you. So as Demi said, I'm Lauren Mathurin. I am the founder of Insightmoney Management and also a vice president in the early stage practice of Siliconvalley Bank. If you haven't heard of Siliconvalley Bank, it's a US bank which deals with tech and innovation companies. I work in the early stage practice, so I'm fortunate enough to meet companies when they've just come off accelerators or they're quite early in their journey, but they're looking for funding. I work very closely with VCRMs, which are relationship managers that work directly with VCs. And I'm fortunate enough to be able to introduce those early stage companies to that VCRM, who then in turn makes the introduction to the VC. We've had a lot of success doing that. And I guess the great thing about that is that we get to see companies when they're at a really early stage and get to help influence some of the things that they do within their business to help them get that funding. On the other side of that is, as I said, I found Insightmoney Management, which up until about a week ago was actually Purple Money Management. That's been running for about 4 years. And the aim of that is to help 16 to 25-year-olds find out about finance. Now, what that looks like is breaking it all down, breaking down the jargon, and really letting them understand the basics of finance and how to manage their money better. We look at personal money and we also look at business as well, because that's my background. I've been in banking for 16 years now, and I started right from the bottom. So I started as a cashier and I've worked my way up. So, you know, I feel like that gives me a great experience in regards to all of the areas of banking and business. So I've actually been in business banking for, I think it's just over 10 years now. And I've worked with, as I said, startup companies in the tech industry, right through to companies that are turning over £1 million and that are profitable. So yeah, that's my experience.
Great, thank you so much, Lauren. And as you all heard, 16 years plus, you know, golden. Now I'm going to introduce Shams. She's joined us all the way from Ghana. Unfortunately, made it, even though it's on, you know, Black people's time. But yeah, I'll let her kind of go for it.
You say that, but I don't know why. You always, it's the second one you've done it with me, Demi, where you've given me a UK time zone, and you know where I am. Okay, so I'm not going to be accountable for this one. I'm the blame. I was actually on a Zoom call. I was like, I've got to go. I've really got to go. Can we reschedule? Anyway, hi all. I'm Charmaine. I'm one of the GPs at Good Soil Venture Capital. We were founded to invest agnostically in tech at pre-seed and seed stage in what we call underventured markets. And yeah, we're looking to see value creation and opportunity there. Examples of these underventured markets are minorities, Black people, people from working class backgrounds, and people from regions that aren't typically looked at or are deemed as high risk. So yeah, having identified a number of underserved and unsaturated niche founders with great business models, we decided to put together a fund. We're still in the middle of raising that. So we've raised 12 million out of a $50 million fund. And yeah, we're just looking for great founders that will help us to become an excellent fund that reflects our people. That I'm a founder first, and so are some of my business partners. And we were able to build and scale things without even knowing what venture was. So hopefully, you know, with the encouragement and the support of the greater village, including people like Lendoe, Impactx, myself, and a lot of the angel groups that are here, we'll be able to build a community of people and founders that are amazing and excel to be the future leaders.
Great, fantastic, fantastic. So you've heard it, you know, directly from Sham. She's been an entrepreneur. Now she's got a fund, and I think that's really important because she's got a mix. She understands. She can kind of she understands you. You know, when these funds or these entrepreneurs are coming to her, she understands them, and I think that's very important. As you know, a lot of people talk about the fact that people don't understand where they're coming from. People don't understand why the funders that they're going to are not understanding them is because they're not from the same place that they're from. So yeah, amazing. Thanks so much, Sam. So we're going to jump straight into it because time is short, and we're going to jump into a few questions, particularly focused on venture. Then we're going to kind of stroll and kind of move into banking, then alternative finance, and then we're going to end off with entrepreneurship. And we're going to really try and figure out how do we demystify this access to finance problem and how do we kind of solve it as a community. So I want to start off with this first question, and it's really about the kind of elephant in the room that everyone always talks about, right? And it's the fact that only 1% of VC funding goes towards those from BME communities. Now, I want to kind of flip the nail on the head and say, instead of what can the VCs do, I want Ezzy and in fact, I want to open it up to the floor actually. I want any of the panelists can answer this and just put your hand up. But I want to ask, what can we do as entrepreneurs from BME communities or from less represented or less served communities to increase that number? What can we actually do? So I'll start with Ezzy and then I'll just kind of go around the table. Yeah.
I think that's a really good question, and it's a real challenge. I think the first thing we have to look at as entrepreneurs, I'm an entrepreneur. I'm a weird one because I've been in that banking space, I've been in the alternative finance space and the VC space as an employee, a developer, an entrepreneur, and now a VC. So, you know, I've done the whole range of things. I think the first thing we have to educate ourselves around is what is it that investors are looking for, right? And why do they invest in certain types of businesses and what are the outcomes that they're looking to achieve? For example, there are different types of investors who want different types of outcomes. If you go to a VC, they are looking for what is the exit opportunity in this company? Is it an acquisition? Is it an IPO? And how does it get there? Now, when they're talking about that kind of outcome, what they're really looking for is, will this deal, if I invest in your startup, will I get an exit that's big enough to cover the entire cost of my fund? So if I'm, say, a £30 million fund, if I invest in you, will you exit at a scale that's large enough for me to return £30 million, right? That's the first point we've got to look at. And as we're building our businesses, we've got to be thinking, am I building a business that's genuinely going to be valued at over £100 million someday, right? And if so, why? Why do I believe that? What other companies in my space, in my network, or that I've seen on the same journey that I'm on are going to achieve these things? And once we start honestly looking at that, we start to get a better idea of whether or not this business is VC backable. Because the other thing I do find is startups tend to come to me, for example, when they're too early in their journey. Mm-hmm. They're potentially generating revenue through consultancy and have an idea to build a product around that. But because they're generating consulting revenue, they feel that validates my concept. And for an angel investor, maybe. For a VC, probably not, right? And it's challenges like this that I see all the time. Are you at the stage where it's the right time to go to a VC type investor? Or should you be going to an angel or a high net worth, a family office? And we can obviously talk about how you gain access to those types of people later on in the talk. But I think a key thing really is identifying what is the outcome of the investors that you're looking at. What is the genuine outcome that you envision for your business? And obviously everyone feels their business is going to be a multi-billion pound company, but genuinely, where do you think your company is going to go to? And where is it on its journey, right? So my company, Codeuntapped, it's really a social enterprise, even though it's a for-profit. It's not generating any revenue. There is no value in me taking it to an investor at this time. I know that, so I haven't. However, we're talking to other companies about doing a potential merger and a joint acquisition to grow out and develop a e-learning platform, which will generate revenue for the business. So maybe in a year or two, it will be in a position where going to investors is a good idea, right? But it's all about being really honest with yourself, getting your product to market, developing some traction, some execution, and then going and speaking to the right investors. I hope that helps.
Amazing answer. Tom, do you wanna?
Yeah, I totally agree with pretty much everything that Ezzy said there. With reference to me, I mean, I've pretty much been quite anti VC for a long time, and I'm quite hardball when I talk to people about asking the question of why they're considering going to VC, because in general they're always way too early. And for reference, of the 25 million that I raised, none of it was from venture, like zero. And in particular for me, especially when I was starting my business back in 2008, the UK didn't really have many VCs that had operational people that were focused at different types of business ideas. They weren't the sort of people who could invest in my concept, and that I understood that quite early on. So then, in terms of like, how do you make sure that you get the right money for your business? It's always trying to think really deeply about what is it you're trying to do, and who are the sort of people who could jump your business forward. So I think it's always best to think about that first, and don't think about the money, but what are the sort of connections and people that you would love to get involved in your business that could step change the whole business. And if you start from that starting point and think about that network of people that you need to get to, then I think the prime concern is actually about networking skill and capability. Try and figure out ways in which you can jump from one person to another. How do I get in amongst that group of people? And I think invariably you end up finding that you jump into a group of people where, as well as being the sort of people who could help your business, they're also potentially the sort of people who would invest in your business. Because when I think about myself now as an angel, I want to invest in businesses where I think I can add value to that business, where I think I could have a dramatic impact on the likelihood of that business becoming a success, and therefore basically making a return for my money. Like, if you put money in the markets, you have no ability to impact whether that money is going to go up or down. Whereas when you invest in a business with a passionate founder, where you potentially have expertise and you have connections, you can have a strong likelihood in your own money delivering a return. So I think, everything that Ezzy said, and then if you switch it around as then you as an entrepreneur, really think strongly about who are the sort of people and types of people that could have a dramatic impact on your business. Make that list and make it ambitious, and just basically try and find those people and network into that group of people. So you need to escape your own network and jump into different types of networks of people.
Very fantastic. Some big keys there, major keys. Lauren, do you want to go, and then Shannon?
Yeah, absolutely. I mean, I would second what both guys have said. Number one, network is absolutely key. And number two, knowing who and why you're trying to get investment at that stage of your business. A lot of the time we see companies at SVB that are trying to get introductions to VCs much too early. You know, they haven't even got their first lot of seed funding through or anything like that. And, you know, when you say to them, you know, why do you want investment from VCs? Oh, because that's the thing to do. And it's like, well, actually, there are many other ways of getting funding initially. You know, you're not known, you know, how are you gonna get this introduction? You know, it's all about credibility as well. And as Ezzy said, it's about having a product which, you know, is going to be something that a VC is going to want. So where is the exit strategy? It's not about having a product that's only going to be available to 1% of the market. You know, who's going to want that? You know, a lot of the times we see companies, and, you know, sometimes a lot of the time it's Black owned companies that are aiming at just Black people. And that's fine. But if you were to approach a VC with that, you need to know what's the percentage of Black people, you know, that are going to buy this product. And if only, say, 50% of them are to buy this product, what does that actually look like in terms of numbers? So it's having that kind of education and being able to have those honest conversations and expecting honest results, which is a lot of the time you might not get the funding because of that. So it's just looking at the market as a whole and saying, you know, is this a product that's going to get me that exit that the VC is going to want?
Fantastic. Thank you so much, Lauren. Charmaine, sorry, I've been calling you Shams. Sorry, Charmaine. Could you let us know what BME entrepreneurs could do to increase that number? Oh gosh, sorry.
Thank you. Usually it's me not muting myself. So and it's okay for you to call me Shams, it's fine, you're okay. I guess one of the main things is really quite daunting for a VC to know that anybody is trying to build their business around what a VC wants or an investor wants. It should be something that you have found a genuine pain point in, that you have done relevant market research and are having real conversations with your customers. Customer obsession is something that should be paramount, not the obsession with what VCs want, because most VCs pattern match, so they just want what other VCs want. And if you look at a lot of the big companies that have, you know, the big successes, you'll notice that no one cared about those. They didn't fit into any of the VC boxes of what we wanted. Airbnb was told that this is a preposterous idea and can you go away and play with your airbed somewhere else. But in building traction and being able to build and lead teams, you're able to give some analytics that convince people otherwise. And if you focus on those things, you'll spend a lot of time, especially right now, you can call your customers or your potential customers. You can speak to everyone in your network outside of yourself, because we all have a few voices in our head that say, yeah, you know what, that's a wicked idea. That's it. No one's done it before. I'm the person to do it. I'm going to execute this, which is great, but you also need to get some validation outside of yourself and your four voices that have told you it's really good on different days, and not just your friends, and making sure that you're asking questions to potential customers in a way that isn't forcing them to be a customer. So not like, I've got this great idea, you know, with all that enthusiasm, that makes it hard for people to say, I'm not really sure that I'm in love with that. It sounds terrible, but you sound really infused. You kind of have to go with a really palatable conversation and just say, like, this is what I'm working on, or even not this is what I'm working on. What do you think about this? What do you think is missing from this piece of equipment or tech? And I agree with Lauren. We don't always need to focus on just building stuff for Black people. It should be that we are Black and we're building something amazing, period. For a bigger market size as possible, because that usually helps, but not you just plucking random numbers off the internet. So you genuinely have to understand how many of those customers or how much of that market you can genuinely attach yourself to. I know it's kind of hard when you first, you know, when someone asks you to do a business plan and they say to you, get these numbers together, and you're thinking, well, I haven't even got products. I've got nothing. Like, you're asking me for these numbers. Where do you want me to pluck them out of? And my first business plan, I would really honestly tell you, Dot, that I was like, okay, so you've asked me for projections. This is a guesstimation. On month 1, I'm going to have this many customers. Going to double that for month 2, triple that for month 3. And that's what I did. That's not what you lot should do, because I'm telling you otherwise. But you should kind of genuinely gauge. It's good actually if you have competitors, because you have something to build off of. You can be the midget standing on the giant shoulders, and you can say, actually, this company have done something really amazing here. They built something. However, there's a big gap here, and there's something they're not fulfilling. And I know that, because I've spoke to people and they've told me that they're having the same feeling as me. And then in building it, I've now built some customers. You only have to build like 10 customers that love it, rather than just trying to get everyone to sign up, and then get those people to be your advocates. But I'll leave the floor for a second.
Oh, amazing. No, gems. I mean, everyone, if I take a while to kind of react, it's because I'm taking notes myself. So, you know, I think it's the kind of pieces of advice that everyone in this call needs. But I'm going to move on to the second, the second kind of section now, and kind of move into like, kind of banking and alternative finance products. And I want to aim initially at kind of Lauren, and then I will go to actually Shams. I'd like you to kind of come in here as well as an entrepreneur, or at least kind of like someone that's built a traditional business. Being many of us, we have businesses that have started quite recently, the last 2 to 3 years. So being relatively early stage, or being kind of from a community where actually access to venture capital because of our network isn't really there, what kind of products should we be looking at, Lauren? And Shams, I'd like you to jump in after as well.
Yeah, so you probably don't necessarily want to look at the traditional banking products either. The reason, it depends. So let's say you're a startup company and you've put £10,000 into the business, but you don't have any traction yet. A bank is not going to lend you money based on that. They want to see some traction, they want to see some numbers. And if it is going to be based on projections, it needs to be really strong. You need to have experience in the background. You need to be Ezzy or Tom, essentially, before a bank is going to lend you money based on a startup idea. But for the majority of us, even myself, based on my own company, I wouldn't get lending from a bank. So you need to be looking at places like Funding Circle, potentially startup grants, startup loans, depending on your age. There's different places that you can go to that will give you money. I know the Prince's Trust initially will do it for people under a certain age. But banks, if I'm being really, really honest with you, are only going to lend money to companies that have got traction, that are profitable, that have got skin in the game. So you need to have invested some of your own money before they will put money in as well. And essentially, depending on how much you want to borrow, you need to have your own assets, because they will want to take a personal guarantee from you. And that's my banking experience for you.
Thanks so much, Lauren. So Shams, as someone who's been an entrepreneur, built a business over the space of 10 years, what should we really be doing in that first 1 to 3 years? If a VC is not going to give us money, and if the bank is not going to give us money, where should we be going, and what kind of products should we be looking at? And this could be anything. This could be like even out of the box stuff that you've done.
Me.
So again, I literally bootstrapped to the end. I didn't receive £1, £1 of investment, of grants, of anything. I literally built traction from the jump, and just ran with it and continued to build. And of course, that's not a viable option for everybody. But I think that when you have customers, you'll also automatically feel a bit more confident in approaching people for finance, because you can then give them your numbers and be able to say to them, actually, look, I've generated this out of thin air. And because you can see I'm a magician, then you're more likely to take me seriously. In terms of kind of other ways of raising right now, in 2020 we have lots of options that I didn't have when I set up my agency. It was like 16 years ago. A lot of those options weren't available. It was simply the traditional banking route. now I would definitely, especially for early companies and especially in this climate, I would be looking at talking to your friends and family. And when I say friends and family, I mean in like a crowdfunding kind of way. I really like, a lot of VCs don't like crowdfunding, but I think it's a great way to show that you have people that genuinely believe in you and that are now going to become advocates for what you're building. So I think that's always great, and it's a lot cheaper. And I think you really have to look at how much this cash costs you in any of the elements. So it's great whether or not people are going to take you on as a lender or as a grant or a loan. How much is it going to cost you? If you go to an investor, how much equity do they want in turn? And if you're really, really early in your journey, even if you are fortunate enough to be able to onboard people, it's likely that you're going to be giving away too much of your company. And depending on what you want to do as a long term, it may just prove really expensive. Of course, because we're here with Demi, I would also send you over to Lendoe, but Lendoe do require you to have a little bit of traction also. I know that I'm seeing people asking in the questions here about what metrics are looked for and how to build traction and what traction looks like. It can be users. It depends on what kind of platform or service or product that you're building. If it's a media company, for example, it's likely that you'll be building users. If it's a product, it'll be sales metrics and how many sales you've made, how many repeat customers you've had, and what your service looks like. If I was to call one of your customers, how happy would they be about continuing forward and making future purchases from you? Those are the kind of metrics that make sense. It's always great if you can show us revenue, but there are other ways around it. I hope that answers your question, Demi.
Yeah, thank you so much.
Yeah.
Tom,
I can speak to the friends and family piece. So when I created Metail, I knew it needed a lot of IP creating first. So it meant that I was going to have to invest quite a bit of cash at the beginning before I was going to see anything coming back the other way. So, if you are starting a business where it's all about consumers and you can get consumers on board quickly, you need to basically raise relatively little, but in comparison to actually, I need to build technology first. So I was in a situation end of 2007 where the company I was working for was about to be bought. So my bosses were going to become rich. So they were like, yeah, we'll invest in you. No problem. Good to go. So, and I was going to raise 200K and I was going to get that money, but they were about to sell the business to Icelandic banks. And we all know what happened to them. So I think the day before the deal was supposed to close, it all fell apart. But I felt that the idea for Metail was strong enough to go for. So I sort of slightly crazily quit my job without any money. And I had a big mortgage to start Metail. And then I basically spent time really sort of digging deep into the business plan to work out, right, instead of 200K, what's the least amount of money I need to get to a traction milestone? So, and for me, the traction milestone was first patent filed and prototype built to basically showcase how the technology would work. So I think I did get a loan from a bank, but it's weird. You can get a loan to pretend to buy a car, but you can't get a loan to actually invest in a business. So a personal loan from HSBC to buy a car, and then I was talking to everyone all the time about my business. So through doing that, I got the exact friends, family, and fools. I got 10K from an aunt who I didn't expect to have money or money to give me. 10K from an old school friend who'd gone into banking. 10K from a university friend who'd also gone into banking. And then 10K from an old boss, and then 10K from a random guy I met at the top of the gherkin. And that telling that story has actually led, my claim to fame here is that has led to the SEIS. So the SEIS was built after me telling my friends, family, and fools story, and provides significant, basically, incentives to people to invest at that stage. So for a 10K now, only 3K is at risk for people investing at that early stage. That's a significant incentive to basically invest in early stage startups for that early section. And so it was only 60K. So instead of 200K, it's 60K, loads of favors, and not paying myself for 2 years and doing odds and ends of consultancy gigs and being a producer on the Professionals pension show, whatever was needed to basically keep money in the door, and learning how to survive on 600 quid a month. And that's what you do, right? So and by doing that, actually you build a better business, because you spend time really focusing in on what's important, what are the key things you need to prove, what do you need to deliver against, and how is the business model going to work. And I think that's where, like, I think we've sort of got slightly spoiled over the last few years, where this notion of like, I'm going to go and get VC money, I'm going to have this amazing office, I'm going to like be at WeWork and have views over the city, and free beer on tap at 4 o'clock every day, and life's going to be easy. It's like, no, building a business is damn hard, right? So like, the earlier you get into that sense of it being damn hard and focusing on it being damn hard, I think actually the better. So
I just have to say, you as a rude boy and being able to raise 60K from friends and family, 60 quid, I would have really been pushing it with my friends and family. I'm telling you.
I'm very lucky. I have to, I've been fortunate. I got a scholarship to a good school, and I went to Cambridge University. So I've ended up being leapfrogged into a whole bunch of networks, which has got me to people who've been successful. So I recognize that opportunity isn't open to all. So I don't want to pretend that everybody's got that opportunity, but the ability to sort of try talk to everybody all the time about your business, like never basically hold back and think it's a secret, but talk to people, and sometimes you'll get surprised, like people come out of the woodwork and who want to support you in ways that you never thought were possible.
I think that's an important point, though, that you're saying, because clubs and alumni are great ways to build your reach and to extend your phone book. Go to golf, tennis, places and haunts. A lot of you are saying you need to make bank friends. Yeah. You probably do, but I hope that you understand that you have to put work into it. It's not going to be like, I've met with you 3 times and now you've got to give me money. It takes a lot of building and a lot of time and perseverance and conversation and updates, like people seeing that you're genuinely interested in building this thing, and you're not just trying to get a stack of money. And the same when you're approaching us as VCs, it's like you're not just going to message us once, send us an email, and we're going to say, oh yeah, amazing, this looks like a great idea, here's 5 million. It's just like, it doesn't happen like that. And I think it's really important to be realistic about that.
Mm.
Another point that I would just add as well to that is finding mentors as well. So speaking to people who might have that network that you want to have the doors open to, and asking them to be your mentor. I've got a mentor who's opened certain doors for me or introduced me to people. I wouldn't necessarily say that they helped me in my career per se, but they have introduced me to some really great people who have then gone on to introduce me to further great people. So that's another great way to open up your network as well, and be bold with it. Approach people that you would never expect to be friends with or have conversations with. Just go for it.
But make sure you're bold in the right way, right? So like, too often people will just send you a LinkedIn request and think that's job done. It's like, no, like, you've got to make the effort. You've got to basically spend a bit of time getting to know something about them, and actually write something. Like, it's so easy just to LinkedIn request somebody. You don't have to write that much, but write something which shows that you know something and you've got something to offer. So I think generally people will always be open to having a coffee, or flattery, right? Everybody will want to talk about themselves. So like, if you think about that from the starting point, then all you've got to do is actually quite little to basically just jump yourself above the norm. Like, find something interesting to say. By having something interesting to say, that person is connected and will spot you and pick you out. So like, I will always respond to LinkedIn requests where people have made the effort, and then we've ended up hiring people somebody who came all the way from Italy and ended up working for us just from writing a really interesting LinkedIn request. So yeah, as you say, be bold, because you'll be, more often than not, you'll be surprised. People are open.
Yeah, no, I agree totally. Good, very, very good tips and good points, and hopefully your LinkedIn inbox doesn't get flooded out. Onto the next question, which is actually a really interesting one, based on kind of what kind of, you know, what was just said, and it's for Ezzy, and it's around. So we know now, okay, how to potentially go and access finance. We know now what kind of VCs are looking for, and also how we as a community can kind of increase the likelihood of us accessing finance. But what if we just don't have a VC backable business? So what I want to do is, can you demystify what is a startup and a small business starting up? Can you demystify the two? Because I saw a definition that a startup is a business that grows its user base by 20% month on month. And I've got a lot of friends starting startups, quote unquote, and they're not growing user base, they're not growing customer bases by 20% month on month. So could you demystify the difference between a startup and a small business, so we can know where to go as soon as we start?
That's a really interesting question. I don't think I have a definition for that, but I think we talk about lifestyle businesses versus VC backable businesses, right? And it sounds like a really harsh term. The irony, the reality is, a lifestyle business is the kind of business that is going to earn money, will pay for your costs, pay you a salary, allow you to build a team, maybe pay for stock, inventory, whatever it is, but probably won't grow or scale particularly fast or particularly far, right? And they tend to cap out at around £10 million per year. Now that sounds like a very, very good business, right? It is. 10 million as a lifestyle business is fantastic. If you're able to build a company that can earn that much in revenue, fantastic. You probably don't need to get venture capital. It depends on what your reasons for it are. I'd say a startup is a company that is looking to go on a hyper growth strategy, right? Potentially can't fund its own growth, may well be able to cover some of its costs, but needs external capital to almost add rocket fuel to its engine to take it right to the top, right? And those kind of companies, what we're looking for really is evidence of what's the pathway. So at the stage we invest in, we're looking usually what's the pathway to $1 million in revenue on an annual recurring basis, and how quickly can you get there? Because what most VC backable companies are looking for is actually for you to go from 1 million to 100 million in less than 10 years, right? That's ultimately what you're looking for. And I think at the moment that you're doing something like 1 million in revenue on a year by year basis, you want to be seeing annual growth of about 140%. The reason being is that you retain something like 80 to 90% of growth year on year. So that growth will slow down over time, right? But hopefully the amount of money you're making increases. So by year 10, you get to about 100 million. And why is 100 million so important? Because that's the point where IPO becomes highly likely, right? So that's the journey that we're looking for. So when we look at companies, what we're really trying to identify is, do we believe you can get there? Now, if you're going to get there in 20 years' time, that is not of interest to us. If you're going to cap out at 5 to 10 million, that is not of interest to us, right? We need to see that you can get to that 100 million. And you may never get there, because it might be that you might get acquired long before that happens. But you get acquired because other people see your potential to achieve that and then come in and take you out or take you on so that you can support their growth. But that's still a positive outcome for us. So those are really the things that we look for. So often I get asked the question around, what are the metrics that you need? How many sales should I have? How many customers should I have? How many subscribers should I have? My view is, the question I'm always going to ask you is, what is that pathway? And can I believe that based on the numbers and the metrics that you have to date? So there is no one answer for every company. You can look up SaaS metrics, you can look up KPIs, you can look up all sorts of things, and they will give you the numbers to show people. What I want to see is the evidence and the proof that you can get there. It might be that and the reality is, without our support, you're going to hit a ceiling which you're never going to get past. That's absolutely fine, because what we want to do is invest in your growth. And this is what I wanted to touch on in that last question, was that you should not be trying to raise venture capital or VC investment for ideation, for proving out your prototype and developing your MVP. That is not what venture capital money is for, right? Venture capital is to juice and grow your business so that you've already proven an idea, you've got it to market, you've got some traction. Now what do I do to take it to the next stage? That's what VC cash is for. How's that?
Amazing. Amazing. Like I said, I mean, I'm taking notes myself. Me and Ezzy got a conversation to have after this anyway, so.
That's true. Demi knows I've given him some rather stern feedback.
All right, cool. Thanks so much for that, Ezzy. So on to the next one. The next question. It's 1 minute for everyone, just because time is against us, and we have other people kind of hopping onto this same Zoom link after for the whole blackout day thing. So it's 3 tips for small businesses that are trying to access finance, what they should be doing right now. Ezzy, as you just ended, it'd be great if we could start with you, and then we'll go straight into the Q&A.
Sorry, can you repeat that? I was just looking at some of the questions appearing in the chat. Sorry, could you just repeat that?
No worries. So it's just literally 3 tips for any small business right now trying to access finance. What should they be doing? 3 tips, 1 minute.
Go as far as you can without getting access to cash. Extend your runway and aggressively hunt for revenue.
Cool. Tom?
I'd echo that. Extend the runway as much as possible. So, be lean. Look right at this moment, look for any potential avenues for free money, because there is actually a bunch out there. There's grant funding, Innovate UK grants. There's a whole bunch of different types of new accelerator stuff coming on board. So there's ways of getting different pockets of money, which might be helpful. And just be very, very focused on the customer. Who is your customer? That is the best money you can ever get.
Cool. Lauren?
I'd say build your network, so you have the right people to talk to. Make sure that you know your product inside out and your numbers inside out. There's nothing worse than speaking to someone and then they're fumbling over the information. This is your business, this is your baby, you should know it inside out. And number 3, I would say be educated in regards to the type of finance that you need. So don't just go along with the pack and say you want VC funding. Look at all the options open to you, speak to various different people to see what the best type of funding is for your type of business, because as all the guys have said before, VC funding isn't necessarily the only way to do it.
Shams?
Yeah, I echo what everyone said. Look for alternative sources when you're first starting out, and educate yourself. Fall in love with your customer and make sure that they love you. It's more likely they're going to evangelize on your behalf and create organic growth. I would also say make sure that you understand your metrics and you understand the language that's used. Language is a big hurdle for VC, and when you're discussing certain things, you should know some of the terms that are used, otherwise they can leave you there fumbling by yourself and trying to reroute the conversation from CAC to anything else because you're thinking, what are you talking about? And ultimately just kind of see, for me, I like remote first companies that don't get caught up in huge offices and fancy buildings, and are able to work from anywhere in the world, especially when you're brand new and you're trying to recruit a team. It's best if you work remote because you're able to then employ a team from all over the world. So look at strategies that can help you to adopt that, and it helps you to operate lean as well. I know I've been speaking to some people in the chat area about building from the beginning. Building your very first prototypes can be really cheap. You just have to be really, really bloody resourceful, and that's kind of what people want to see when you follow on as well, is how resourceful you've been, because there's going to be times where business startups get hit really hard, like now COVID. A lot of people were unprepared, but if you can operate lean and you can keep preserves of your cash for extended runway if necessary, then you can help to bail yourself out in times of crisis, which is really appealing.
Most definitely. No, thank you so much. Thank you so much. We're going to jump straight into the Q&A now. So I've got a bunch of questions and I'm going to direct them to everyone on the panel. If your question isn't answered, please forgive me. The chat is moving way too fast for me to track it. So I'm going to start with the first one, and that is, so this is from Katie, and the question is, what is a more important factor for investment at seed stage? Sales generated to date, or the problem the company is attempting to solve, and market size? Shams, I want you to start with that, and then Tom or Ezzy,
you knew that I deviated. I did not hear your question, and I was going to rely on everyone else's answers to freestyle.
She's pattern matching. She's just doing what everyone else is doing. All right, cool. Tom, if you can answer that for me. So, what is the most important factor for investment at seed stage?
The one thing you didn't say, team. Team is the most important thing. Like, above all else, it's team, and then size of market opportunity. And then what is the solution to that opportunity? Like, is this a big and growing market? Is it a big and growing market? Does your solution solve that? I think actually at the seed stage, traction is not really that important at that level.
Interesting. Okay, cool. So Katie, that's your answer. If you've got any problems with it, you send him a LinkedIn message. He's gonna have so many messages in his inbox. But all right, next question. This is from Alakwe. Sorry if I didn't pronounce your name correctly, but that's what I got here. And it's, what's the likelihood of being funded to internally validate those numbers rather than going off online figures? So I think that's a question off a specific answer. So Alakwe, please message Lisa O and elaborate a little bit, and then we'll come back to you on that question. And now we can go to the panelists directly. So I'm going to go to the next one. What makes a business unsuitable or suitable? Okay, we've answered that already. All right, SoftBank Group Corporation probably regrets its investment in WeWork, even though the concept seemed really good. Where did WeWork go wrong? And what can entrepreneurs avoid? And what can entrepreneurs do to avoid what happened to them, to avoid what happened to WeWork happening to them? Ezzy, I'd love you to come in here and answer that question.
Governance. They allowed a very charismatic founder to drive his own narrative, and they didn't do any kind of due diligence on that. They didn't put any controls around him, and they allowed him to basically do whatever he liked. If you look at some of the details of what they were doing, some of the things that they were playing at, if any one of us did it, we'd probably got arrested. Ultimately, that's what it came down to, right? What can we do to avoid those things? I think as founders, the answer is kind of counterintuitive, right? Founders want that freedom. They want that control. They want that ability to do whatever they like. But trust me, from prior experience, you need a level of experience and advice around the room, and you need people who you're willing to talk to and who can hold you to account, because it's very easy to run away with your idea and your belief in your sense of self and lose track of reality, right? And that is ultimately what happened with WeWork. I think Lauren's probably got some interesting thoughts around that. Given the time,
Lauren, if you can add to that, Silicon Valley Bank hat on, that would be great.
So where did WeWork go wrong? I think, as Ezzy said, in terms of the governance, and that it was pretty much all out of control. In terms of what founders can do to stop that from happening within their companies, is your board of advisors, as you said, is super important. And having people that are not just going to say yes to you, people that aren't afraid to say yes, and people that have got the experience of potentially things going wrong. Because, having someone who's had the perfect experience going forward won't necessarily know how to mitigate certain situations. So having someone that has the experience of having a business go bad is ideal, essentially, to have on your board of advisors. But also just watching your growth as well, because a lot of the time, yes, we want companies to grow, and we all go for funding to accelerate our growth, but sometimes that is the death of a company. And in terms of WeWork, look at how quickly and how fast they were growing, and all this. I mean, it's wild, but essentially just go at a stable stage of growth, and have people around you that can tell you no.
Can I just follow up on that? Because I think SoftBank being the type of entity it was, it's a 100 billion fund, right? No fund like that had existed before, ends up creating sort of a WeWork, if you like. They're enablers of messianic characters, because they, to Essie's point, they have to find a business that's going to pay back the fund. That's 100 billion, right? So they have to have super aggressive, super arrogant, super messianic characters who believe they can do anything. So you end up with a Travis Kalanick's and the WeWork character to do that. And I think that's a real cautionary tale for people as they try and link to their potential investors going forward, because you want to match yourself to the investors and what they need, right? So if you end up going too ambitious and drive too high a story, fake it till you make it, to a massive fund, that could take your business into fail territory, where it could have been okay and could have been successful at somewhere smaller and somewhere with the right match of ambition to what you were trying to achieve.
Mm-hmm.
Very good point, Tom. Gonna go into the next and the last question, unfortunately. And look, if your question wasn't answered, message them to Lisa O. She's gonna note them down, and we're gonna kind of go directly to the people that you want them to be answered by, but time's against us and we have someone hopping on this link. So, and this is going to be aimed at Tom. I'd like you to answer, and also I'd like you, Shams, to come in as well, please. And it's really because I know, Shams, you've invested in Metail, and that's kind of like a social / for-profit business. And Tom, I know you're doing a lot of work around climate change, and that's also social. And this question is around like how you how you work around the social and so basically, because a lot of us are from BME communities, the problems we tend to solve tend to be from people from our community. Now, based on the fact that we're taking that to funds and taking that to banking institutions, they're going to see it as a social problem. Because for some odd reason, it seems like the government tend to put anything that solves the problems that we have underneath the social bracket, because we're from potentially, I guess, we're from low-income communities, right? So how do you mix, or how do you get that balance between creating a social impact or having a business that creates a social impact but still has that kind of for-profit agenda? I mean, how would a founder go about doing that and raising capital when he or she has that kind of business?
Yeah, I think it's hard. I mean, I generally think having a for-profit narrative always is a good thing, because it sort of gives you the right discipline to make the right decisions as you go. Three of the organizations I'm involved with are B Corps, and I think B Corp helps sort of a founder think about people, profit, and planet, and you have to do impact reporting as part of how you generate the business, and it's trying to basically put a moral compass into what ultimately is quite a psychotic entity, the corporation. So I think the B Corp standard is something to look into. I think in terms of the other way, flipping it into full profit and social, I think talking about what you do and really being strong on culture and values in the DNA of your business and having a really authentic story about it is the way to do it. So keep talking about what you're doing and why you're doing it. Ultimately, it will drill down into who you as a founder are. Like, it's your values, which business ends up being an extension of right at the beginning, and then it codifies into something else. But I think like being really clear on the values, being really authentic about it is the strong way to basically mirror the social and the sort of profit part of it as well. So keep talking about what you're doing in an authentic way.
Okay, great. Shams, anything to add to that?
I think that most people have a philanthropic side to them. However, I think when you're talking about investing, there has to be a business case. So it has to be more than just doing good. So doing good is great. And I saw that someone else said that Black founders tend to look at more social things when setting stuff up. I think that we just need to make sure there's a business case. Referring back to the comments earlier about the fact that we want you to be able to return our fund. We want you to be able to make money. So there's always going to just keep looking at the bottom line. If you have a message that's a bonus, it should be a bonus rather than the front line. And yeah, you just need to make sure that we're going to get returns. Otherwise, you should be looking at people who are looking to be philanthropic and just want to give money away, or want to put into pots that make them feel better about themselves alone. But for us, we have to be accountable to LPs or to our own a lot smaller bank balances than our LPs generally. So we need to make sure that we're going to get a return. So in terms of Metail have a business model, and then they also have the social impact thing as a bonus. And in terms of how much that costs them, is a very small amount, and it also helps them to spread their brand message.
Amazing, amazing. Thank you all once again for joining. Thank you all for your comments. Very quick shout outs before we leave. If you've got any more questions, send them to Lisa O in the chat. She's going to write them down, and we'll go directly to the speakers themselves. BYP are doing a fundraise via crowdfunding, which is an alternative finance product, which was mentioned on this call quite briefly. Check them out. They've almost raised £500,000 in the space of about 5 days. So Kike is an absolute boss for doing that. And we're doing a fundraising campaign for Black children, particularly in East London, who unfortunately are vulnerable and not finding it very easy to kind of find where the next meal is coming from. So there's a link in the chat about that as well. The next panel is for GWOP, and it's all about owning our own narrative. So if you want to figure out how we can work in media on our narrative, stay on the call. If you don't want to, then stay on the call anyway, just to kind of make sure that they have loads of numbers. But thank you all for joining once again. I will be reaching out to all of you individually, panelists that is. And yeah, have a great day. Thanks. Bye.